Welcome to the Killick & Co podcast for the 31st of March, a date which reflects the end of the first quarter, and so far performance of the major markets has been pretty much flat. The FTSE 100 so far is trading down around 1.5%. We've got flat markets in the US. Europe actually has shown a slightly better performance. Indeed, the Italian market is up 13% in the first quarter, and stronger results out of Spain as well. So it certainly is the case that Europe is leading the way, and that has been reflective of the fund flows into Europe out of the US, which we've been commenting upon over the course of the last few months. In terms of weakness, it still remains to be the case that the emerging markets are the underperformers. And we're seeing sort of falls of around 6% in the Mexican stock market. Just a quick look at the week ahead, because this week does promise to share with us some quite interesting data and economic points. Friday we have the non-farm payroll number, a number that is expected to be quite strong in terms of its performance. This is as a result of maybe a return to more normal weather patterns, but a number of 190,000 new job creations is the target for this month. And then, of course, Thursday, possibly the biggest day. This is the date where the ECB are expected to announce on their interest rates expectations. Market quite divided as to whether the ECB will act further at the moment. This is in response to inflation data. Particularly last week we saw inflation data in Europe that came in below expectations. Out of Spain, for example, we saw a move into deflation and certainly weakening inflation numbers. Indeed, just after the recording of this, we will have data out on the European CPI and Italian data as well, and I think that will be a sort of a lead indicator into Thursday as to whether the ECB will take some action. It's on that note that we take a look at some of the charts that have been moving ahead of that decision on Thursday. The Euribor 3-month data is the European equivalent of the LIBOR rate, has seen an increase, the inverse of that being that they expect a tightening in the rate position there. So that is a move ahead. And we also seen some weakness in the euro. It was trading up at around the 139 level, but over the course of last week we saw some softening back to 137.50 against the dollar at the moment. So both charts indicative of some moves from the ECB later this week. However, I will hasten to add that this has been the case in the previous months of 2014. Expectations the ECB would move have led to sort of tightening in these charts, only for there to be some disappointment on Thursday. On the Thursday afterwards, which when nothing further was announced from the ECB. So will this be different this time is going to be the key question for markets this week. In terms of really the sort of key moves last week and observations, just to say that the Nasdaq had a poor week last week. Technology stocks, growth companies overall had a very poor week relative to value. Growth has been the significant outperformer, led by technology stocks and technology flotations, but a lot of these came home to roost last week. This is a chart of the Nasdaq, so rolling over quite sharply last week, and as I say, combining to produce one of its worst performances seen for some time. Some of the lead tech names, Facebook, came back quite sharply, and also Twitter. There was some weakness on those two particular names. We also did indeed see some weakness in Google, but of the three tech names, Google is the one that we prefer, and see the weakness that we in that market for an opportunity to pick Google up at slightly advantageous levels. And finally, just a comment on the insurers last week. We saw quite a sharp reversal of fortune on Friday. Aviva, you may recall, posted some very strong numbers about 2 or 3 weeks ago. The turnaround at Aviva gathering pace, but it's been hit by two bits of news. One from the budget, which was the forced sort of purchase of annuities coming to an end, and last week we also saw what appeared to be a fairly mishandled sort of release of information regarding an FCA investigation into the sale of some old policies. They rectified that late on Friday, but it was a little bit too late to save Aviva from some further damage. At one point, Aviva shares were down 8%. They recovered to close down just 3 on the day, and are opening Monday with a little bit more spirit into a strong market.